There are three massive trends creating a once-in-a-decade opportunity right now. That's what Winston just told me. You just had to lie down on the news. And what have we got? We've got gold breaking records because governments are printing money and central banks are buying gold. Healthcare equipment is booming as baby boomers now age and need healthcare equipment. And power companies are getting rich from the AI revolution. Data centers need massive electricity. So we're not talking about risky startups here. These are real companies making real money. Miss this triple opportunity and, well, you'll watch others get rich while you sit on the sidelines. So what are you going to learn today? I'm going to walk you through why gold is going to hit $4,000 plus, in my view, could go much higher, in fact, and which companies will benefit the most, and how aging baby boomers are driving and creating a healthcare equipment gold mine. So healthcare, that's what happens when people get older. Lots of money to be made there. And then we have the actual AI play, but it's not an AI play. It is the new power play. The power play is the shovel of the AI play. So I'm going to run you through that. Now, if you're wondering who the heck I am, I used to be an investment banker. Replace the B with a W and you get how most people perceive those, and that's completely accurate. I'm also the founder of the Goat Academy. We've got over 20,000 students and we help them get to the path of financial freedom. We focus on facts and data, not hype. Now, why are these three sectors that I just highlighted so important? Let's start with gold right now. Central banks, so your Fed equivalent, are buying gold like there's no tomorrow. Over 1,000 tons per year. And then we have the healthcare stuff. Did you know that more than 10,000 Americans turn 65 per day? Yeah. You know what that means? They need more medical devices. And then we got the independent power play. Why? Because 12% of all power in the US, I'm always referring to the US here, is going to be used by AI within about a year or two. Government policies are backing all three sectors. So we got multiple trends hitting at the same time. So it's kind of like catching three waves at once if you're a surfer. So for those of us who are actually serious about investing, I have something even better than these stock tips for you. And there's going to be a workbook, there's going to be everything here. And that is, I'm going to give you Wall Street's own rules in your pocket. I'll gift those to you. That is literally my gift to you. And I'll do that at a live training. And you can sign up for that at felixfriends.org/training. The link's down below in the description. We'll try to pop it on the screen as well for you. And it's free. And in about an hour and a half or so, I will literally teach you the very rules that the guys on Wall Street use. That sound like a deal? That sounds like a deal. Put deal in the chat and I'll see you over there. Now let's dive a little deeper into the gold story and then into the actual tickers. By the way, I'm not trying to hold them back from you. There are obviously timestamps if you suffer from ADHD or something, and that's okay. You just miss the thread and the actual learning because people just come for like the gold tips. It's like if I give you a fish, it's going to go off in 3 days, right? If I teach you how to fish, it's going to change the story completely. So I just let this thing play. So we have the perfect gold setup right now. Why? Well, you have organizations like the Fed, they're lowering rates, right? What does that do? Well, what do lower rates do? Lower rates basically increase gold prices. That's actually how that works. So when rates go down, gold historically gains over 100% during the cycle. Over 100% during the cycle. Did I just say that? And gold is also the ultimate inflation protection. So if you think those guys are going to let a bit of inflation back in the house, well, gold is your place to go. And then we have China, as Donald says. We've got India. We've got Turkey. And they are all wanting to be less dependent on the US dollar. So they're not a huge fan of Uncle Sam. So therefore, they are no longer buying dollar instruments, which would have been government bonds. And they're putting that money instead into, you guessed it, into gold. 95% of central banks in the world plan to increase their gold reserves. So this isn't speculation. This is actually governments preparing for, more uncertainty and so on. Now, if you want to dive deeper into all of this, including the stocks, including the sectors I really understand. I've actually made a workbook for you. That's free too. And that's at felixfriends.org/3, I think, because we have 3 stocks here. That was sort of the way I remember that. The link is also down below. So download the workbook. In fact, I'll show it to you. Here it is in its full detail. It walks you through understanding the sectors. It walks you through company analysis frameworks, opportunity sizing, edge analysis, power analysis, stock analysis practice, these actual stocks, what we're looking at, gives you the numbers, gives you some exercises so you'll actually remember the stuff. And then we put it all together, we give the picture, and there's so much information on there. It's incredible how much value we give people here. So what's the first stock? The first stock is called ticker symbol SKE. I'll show you the stock chart as well. It's Skeena Resources. This is a gold mine. And if you're looking at charts like this and you're going, oh, it's gone up a lot, and that's really all you see, then you are like most people. And you probably have friends and a social life. But if you want to replace the friends and social life with more money, I'm kidding. You can keep the friends and the social life. In fact, people will love you even more because you'll throw better parties. They'll be like, that guy's always so generous. And I won't really know why. Because you actually understand what the chart's telling you here. And the chart here is telling me breakout. And that's exactly the sweet spot that we look for, increasing volume. I'm not going to walk you through the details of that because it'll make this video too long. But if you join the live training at felixfriends.org/training, then you are going to get gifted that entire knowledge pack right there and then. So what does Skeena do? Well, what I really like about these guys, they're developing a gold mine, probably one of the richest gold mines certainly in North America. And it's in the Golden Triangle. What's the Golden Triangle? It's sort of the Silicon Valley of gold mining. Does that make sense? It's in British Columbia. They have 3.3 million ounces of gold and 88 million ounces of silver. I mean, who doesn't want to own a slice of that, right? And as I say, it's not just any gold mine, it's a high-grade deposit. So it's incredibly profitable. So why are they about to explode? Because they've secured funding. They got $750 million in funding. And that helps them to build the mine. So the first gold production starts 2027. So it's early, right? Now, what is their cost per ounce? And this is, you won't believe this. What's the gold price right now? Gold per ounce. Goldprice.org should have that figured out. 3,680. Okay. So gold now is at $3,680 per ounce. What do you think their cost is for this mine? The cost for this mine is $687 per ounce. And I think we can all see what the difference is and what therefore the profit is. So they're going to make $3,000 per ounce getting gold out of the ground. Now, they expect to take 366,000 ounces out of the ground per year. 366,000 times 3,000 profit. That's more than $1 billion per year. So you can kind of see what people are excited about the stock buying. So all of their investments into this mine, they're going to make it back in 1 year. So this is a pretty freaking good investment if you ask me. Now, I'm not telling you to buy it. I might be wrong on it. Maybe they'll never, the mine won't happen, or they'll find a, green-backed tortoise that's lived there for the last 18 months and is now an indigenous species or something like that. You never know, right? Canadians. But no, Canada has a stable government. It's very mining friendly. So this is good. And imagine if the gold price goes up even more, then this 3,000 could become even more than that. And that's why this is a cash machine, an absolute cash machine. Now, again, I'm still not telling you to buy it. I'm telling you to do your own research. That's what I'm telling you, because you need to have confidence in your own research. Otherwise, you know what you're doing. Now, sector number 2, as I said, it's healthcare. Actually, not healthcare, because that's kind of complicated. It's healthcare equipment. Now, why do we like healthcare equipment? Well, as I said, 10,000 Americans turn 65 every single day. That is 3.6 million per year that turn 65. People over 65 spend 2 times on health care compared to younger people. And this isn't a trend you're going to stop. It's just pure demographics, right? So we are seeing, well, what are we seeing? We need more wheelchairs. So guys, go and do some exercise, right? We need more oxygen machines. Go and do some hiking. We need more glucose monitors, apparently. Stop eating all that sugar junk, right? And we need more dental work. Floss, my friends. We have more chronic diseases. I'm not going to write this down. They're depressing. Diabetes, arthritis, all that stuff requires long-term equipment care. And AI is making these medical devices smarter and more profitable. So AI is creating more money here. So the medical equipment market is growing by about 50% over the next couple of years. So the stock we're looking at here is called Envista. The ticker symbol is NVST. Got it on the chart here for you. And if you join me on this live training, you will see and you'll be like, oh, I really understand why Felix looked at this one, because this is textbook. This is like a really, really textbook. So we break out of these highs, you just go a little bit higher, and then we have our sweet spot. Okay, so come and join the live training, and we really explain that to you in proper detail. But Envista is essentially a gold mine too. It is a dental gold mine. What do? They make dental equipment, and they make supplies for 90% of clinics, not just in the US, not just in North America, in the world, use these guys. So I like to think of them as the, remember when Intel Inside was on every computer, on every laptop? These guys are the Intel Inside of dentistry. Their products are everywhere. Now, you probably don't know the brands. There's things like Noble Biocare, dental implants, 30 plus other dental brands. 85%, and this is insane. Write this down. 85% of revenue. This is what makes a good business. 85% of revenue comes from consumables. Think about it this way. A product is like a gun. You have a gun. You buy one, you have the gun for life. Then you got to buy ammunition. That's the consumable. Every time you fire at something, clay pigeon or something, you got to buy new ammo, right? That's the money machine, because you can only sell so many guns, but you can sell a lot of ammo. So that's the recurring income. And if you look at the last earnings, well, 136% increase in profits over the year. Beat market expectation by 13%. This is in Trade Vision here, right? Where you get good data from. They've raised their guidance. Management is confident. And, well, again, baby boomers, they're keeping their teeth longer. They need more dental work. Dental implants are becoming common. They have an Invisalign competitor. You might have seen those, right? It's called Spark Clear Aligner. They have AI-driven diagnostics and make dental care more precise. But it's really about that aging population, because older people need more dental procedures. Now, what's our sector number 3? This is the real AI play. It's the lowest risk AI play I can think of. And again, I'm not telling you to buy it. I'm not saying there's no risk. There's risk in everything. But if you understand this, you're ahead of 99% of people. AI data centers use 10 times more electricity than normal data centers, who also already used quite a lot of electricity. So we're going to get, if you look at the pie of, who uses all the electricity in the US? Well, it's obviously households, factories, and so on. But we have this massive slice coming in here. Some people are saying it's 12%. Some people are saying it's going to be up to 50% of all energy, of all power, will be used by these data centers. But even if it's just the 12%, that's the equivalent of adding the state of California to the United States in terms of power consumption. And I think California has probably used quite a lot of power, right? So that gives you a bit of perspective. So therefore, it is like the California gold rush. Everybody needs electricity, which is the picks and the shovels. So nuclear power is making a comeback because AI needs 24/7 power. Yes, you can put a windmill out there. I'm going to try and draw a windmill, and that'll be very nice and all of that. And you can put your solar things onto your roofs, and that'll also be very nice. But the trouble is when there is no sun, or there is no wind, or actually if there's too much wind, these things don't operate. I'm not against them. I'm just saying they don't work. If you have a data center and you're Amazon, you're just like, I need 24/7 power, the same amount of power every hour of the day. So what are you going to do? Well, you're going to go to these charming little fellas. Remember those? Your nuclear power plant friends, which have been now made green. Yes, apparently. You see, Bill Gates did a decade-long campaign to make these guys carbon neutral. That's what the whole carbon thing was about, by the way. It was never about raising oceans or any of that, rising oceans. It was just about making nuclear clean again, right? So that's a good thing. But there is another option, and that is natural gas. Now notice how they put natural in it because that makes it sound cleaner. And that's a good alternative. Now, I also think nuclear and uranium and all is a good alternative, but this stock is not one of those. So the stock that we're looking at here is called Talon. Talon Energy. And Talon Energy has the ticker TLN. I'll show you the trade vision chart. Here it is. And you might start to see maybe just a little bit. And after you've been to the live training, you'll be looking at this and going, I really, really get this now. Right? We're seeing the breakout here. We're seeing the money opportunity here. I'm saying there's always risk with every opportunity, but just so you understand where we're coming from. So what does Talon do? Well, actually, they do the two things I just described. They have nuclear power plants and they have gas plants across the US. This is 24/7 carbon-free power that AI data centers desperately need. And the natural gas stuff is kind of like a backup when the demand spikes. So they like owning both because it gives them steady income. And the secret weapon they have is just, wait for this, Amazon. That little company, Amazon, has signed with them a deal for 20 years, talk about predictability of income, for 1,920 megawatt of, as Bill Gates says, clean nuclear power, right? That's a lot of power. That's enough electricity. To give you an idea how much that is enough power for 1.5 million homes. That's just Amazon one deal. So until 2042, with extension options, Amazon is paying a premium price for reliable carbon-free electricity, right? So what are they therefore doing? They're expanding. How do you expand as a power company? Well, you can build a power plant, takes absolutely forever, or you can just go out and you can buy 2 plants, which is what they've just done. So they've spent 3.5 billion to buy 2 more power plants. That increases their power output by 50% more power. Right? So it's a huge growth. And these are highly efficient. And they're immediately profitable. So it's much, much faster than buying them. So revenue is going to grow significantly. By 2026, we expect about 60% more revenue. And yes, the stock's already up a bit, fair bit. But the story is just beginning, and most people don't realize what the heck's all about. If you can hear the meowing, by the way, I've got 2 cats lying here who are thinking it's probably snack time. So, love or loathe the whole power thing? Well, it's the only way to power AI. What does Wall Street think of this? Well, actually, 11 out of 12 analysts rated a buy. Now, I don't really care much about analysts, but, some people do. But that Amazon partnership, just removes most of the risk, and they still keep the upside. So we have 3 sectors here, 3 sectors, and I like being in different sectors. So we've got gold, right? It's lower rates, central banks buying. We've got healthcare equipment. That's people getting older. And then we have power, which is powering literally the AI revolution. And by the way, the government, Uncle Sam, is being very supportive. Why? Because Well, it's the government that is lowering the rates. It's the government that's buying gold. Healthcare equipment, guess what? It gets Medicare and all sorts of aging population support. And power, well, it gets AI infrastructure investment and lots of clean energy incentives from the government. So all three sectors, I've caught the pest who's making all the sound around here. This is Sabrina, by the way, who's in charge of energy research. Aren't you? Are you? Well, maybe she'll sleep on it. So we have government tailwinds, not headwinds. And they're all kind of related, right? So you got aging population needs healthcare and it drives government spending. So you get more inflation, therefore gold goes up. The AI revolution needs power and it creates wealth that buys gold as protection. And economic uncertainty drives gold demand and healthcare spending. And these opportunities, they come and they go. So, gold could hit $4,000. Some people say it could hit $6,000. It's the move up that makes these guys the money. What about old people? Well, old people peak in the next decade. So at some point, everybody's catching on this, and then these stocks will start to come down again because thinking, well, the peak's coming in 3 years, and therefore this is going to fizzle out again. And what about power? Well, all the infrastructure build out is a 5-year story because by that point, we'll have enough power. So early investors, and this is how it works. Every opportunity in the world works like this. This is time. This is the start. You've got these guys here. They are very early, right? I don't think we're there anymore. And then you have this sector here, which is early. And then you've got these people who still make money. You've got people who are a little bit late. You've got people who missed the party. And then you've got people who are just probably dead. Okay, so that's basically it. So right now, in my view, I think we are here for all three of these opportunities. So that means we have all of this time to make money with these. I'm saying there is risk with it. Let me walk you through some of the risks, right? Because you need to know the risk. If you just, I don't want to know the risk, I just want to know the upside. Well, let me walk you through the risks, okay? And let me know if this is helpful, by the way. Put it in the comments down below. Gold. Well, if you get less inflation, gold starts to stutter. Healthcare. What's the risk with healthcare? It's really a recession. That's when people stop doing dental work and so on. And what about the power play? What's the risk there? AI could just bust. Maybe it was just a figment of our imagination that is incredible. And I think it's incredible. We use it a lot. We build software like Trade Vision and stuff like that. It's incredible. We can do stuff now that we could not dream about doing 12 months ago. And then what about the companies themselves? Is there risk to the companies? Yeah. So you got SKE with their gold mine. Well, they did have delays in building that mine. Okay. I don't think it matters that much, but it could have delays, right? We could have, you look at NVST, healthcare guys, you could have more competition. Someone bigger might come in and try to take some of the pie, right? And TLN, well, you might get a new government who hates power and taxes it and wants more regulation. So it's probably more of a regulation play. That's the risk here. So how do you manage risk? You don't put all your money in one sector or in one stock. All three companies have strong financial positions. And being diversified across more sectors like these, well, it reduces the overall risk. And then, of course, only invest what you can afford to lose. That's a good story, an important story. And people are always like, I don't really get that. I'm 30% in Tesla or 70% in Palantir or something. Yeah, you're taking insane levels of risk. And you got lucky because the market's been very benign, but it's not always benign, right? I listened to an interview with a former Goldman Sachs CEO the other day, and he was saying every 5 years we get a big bad event, some sort of crash. And if you think back and, there was, I think it was, 94 or something? Then we had, 2000. Then we had 2008. I think there was something, wasn't there something in 2012? I think there was. There was somewhere around there in the middle. I can't remember it. We had obviously 2020, which was COVID. So it's sort of, so you're sort of roughly right. So we're kind of due. I'm not saying it's going to happen. I think we're in a big, beautiful bull market, but you always need to be prepared for the bad stuff. I'm sorry about that crying. That is a little annoying. I'm going to have a word with her. You have cats, you know how ridiculous that sounds. So if you want to learn the complete 3-step system for finding these winning stocks, learn proper timing, position sizing, and when to take profits, the most important lesson of all, then join my free training at felixprehn.org/training, and don't let Wall Street have all the advantages. Like, help us level the playing field for you. felixprehn.org/training. Thanks for watching. Are you worried you're going to get caught out by the market crash that will inevitably come because the market moves in patterns? Well, that's what Hugh just told me to watch out for. And in all seriousness, there is actually a structure to predict the market patterns that happens with 90% accuracy.